In this episode, I want to relay the sad tale of a widow that missed out on a $2 million death benefit, tax-free, in trade for saving just a few $100s a month. So get ready. I hope you get the message as I relay this story. So I'm Doug Andrew. I've been a financial strategist and retirement planning specialist now for north of 5 decades, helping thousands of Americans optimize their assets, minimize taxes, and empower what I call their authentic wealth. So I have well over 5,000 clients that I've had personal relationships with. And among all of the wonderful success stories among these thousands of clients, there are some very sad tales that resulted in them not achieving what they really wanted, but didn't know they wanted until they missed out. So I remember years ago meeting with a very sharp gentleman that was a realtor. And even though he was a real estate investor, like many of my clients, made his money primarily in real estate, not only buying and selling real estate, but in owning real estate himself. But he saw the need for a working capital account that's tax-free. And this is why many savvy real estate investors come to us. And he took out an indexed universal life insurance policy after attending one of my seminars. And this was to accumulate money tax-free and then be able to access that money income tax-free with the banking concept, being his own banker. But he also appreciated the death benefit that came along for the ride. So if you've watched very many episodes on this channel, I'm an avid believer in properly structured max-funded indexed universal life. This is where you take the least amount of death benefit you can get away with and put in the most money the IRS allows, as fast as they allow, to turn into a tax-free cash cow to use life insurance for living benefits. The death benefit is sort of secondary. So in order to accommodate the amount of money that this real estate professional wanted to reposition to put into IUL to accumulate tax-free and be able to access that tax-free anytime he needed for his business to buy and sell real estate, the minimum death benefit to accommodate the amount of money that he wanted to reposition to increase liquidity, safety, rate of return, and the tax benefits was $2 million. So he took out an IUL policy, and through the good times and also the bad times, the recessions, we would meet annually and go through his IUL policy, and he would use that for business purposes. And even though he wasn't married at the time, he didn't have any heirs, he still appreciated the death benefit, but it was secondary at that time. Fast forward, he met a wonderful, beautiful lady that was from Europe. And when he got married, they ended up expecting a little baby. It was a very handsome little boy, and they would come to their annual reviews. And this little boy was so darling, and they cherished this son, of course. Well, about the third year, they came in for reviews. I could tell there was some tension. And so his wife had been objecting to even the small amount of cost to keep the $2 million of life insurance in the IUL. Instead of looking at the rate of return net after all costs of the insurance that she was getting on that policy, because he named her, of course, as the beneficiary when he married her. And so now he had a need for that life insurance, a spouse, if something happened to him, and now this little boy. And so he was thrilled to have the life insurance protection now become even more important or valuable to him. But she couldn't see the benefit of that. Even though he was earning rates of return between the 6 to 10% internal rates of return, and the insurance was really just using a few $100s a month of the overall amount that was accumulating and earning in the policy, she said, "Why do you need life insurance?" He was very healthy. And she said, "You're not going to die anytime soon. You probably won't pass away for 30 or 40 or 50 years. You're so healthy." And she says, let's just cancel the insurance and just invest our money. You do really good in real estate. Now, I never twist any of my clients' arms, but I looked at him, and he just sort of had this sad look like, Doug, I don't want to let this policy go. I don't want to cancel it to save a few $100s a month because, frankly, this gives me peace of mind to have this $2 million death benefit. I don't think I'm going to die anytime soon either. But he said, this is my wife, and we've just been married here for a few years. I need to make sure we stay compatible in our marriage. I'm afraid we're going to have to let this go. Oh, I felt so bad. He ended up regretting that because he liked using the money tax-free. But I didn't hear anything much after that, except their dear friends who came in, who they had referred to us. They came in for a review on their policy about 6 months later. And I asked how they were doing. And he goes, oh, didn't you hear? And I said, hear what? Oh, he was killed in an accidental death on a hunting trip. Somebody heard noises in the brush, and they shot in there, and it was him, and he died. I went sick, absolutely sick, because 6 months earlier, had that happened, there would have been $2 million of tax-free life insurance proceeds go to his widow, and also for the benefit of their little boy. And instead, they had nothing. I said, oh, well, is she okay? How's she doing? And they said, actually, she's destitute. She moved back to Europe, to the Baltics, and is living with her folks. And she now regrets not having that $2 million of life insurance. I felt horrible about that. But there was nothing I could do at the time. And so sometimes when I meet with clients and they say, well, yeah, we don't really need any more life insurance, or they don't think they do, they discount the need for it because they're coming to me for the living benefits. And so they focus on that, thinking, like we all think, that we're immortal, okay, that we're going to live forever. But I know by being a financial advisor that not everybody is going to live forever. So I'm sharing some stories on this channel to be able to explain the merits of the life insurance that comes along for the ride, which when you structure it correctly is being paid for with a minuscule portion of money that would otherwise go out the window in unnecessary tax. Meaning most of my clients, if they come in and have annual reviews and diversify, they are able to earn 10.5%, 11%. If they earn 11, they net 9.6, they net 10. Only 1% is the cost of the insurance that the IRS has to be there in order for them to have a tax-free return of 6, 7, 8, 9, 9.6% is what most of my clients have averaged. Net internal rate of return after the cost of insurance. That's why they come to me. But those that end up passing away because life's unpredictable, all of a sudden the death benefit, whatever you leave behind blossoms and transfers tax-free, becomes an immense savior for many of these people. So if you want to understand more about max-funded index universal life and how you take the least amount of insurance, but still how important that death benefit is, I want you to read and study my book, The Laser Fund. Now, my Laser Fund book has been flying off of my warehouse shelves, and it retails on Amazon for anywhere from $20 to $60, but I'll gift you a copy for free. This is the 300-page book, which is actually 2 books in one. This side, the white side, is what I call the left brain side. This is for those people who like to learn with charts and graphs and percentages and numbers. But if you're a right brain learner, you learn more by stories. You can just flip it over to this book. This is about 100 pages, 12 chapters with 62 actual client stories. And I have these stories of how many clients were able to use the IUL for living benefits and also death benefit. I have a chapter just dedicated to that. And I always also include a chapter on when something went wrong and why it went wrong, because you have to fund it correctly and have it structured properly. So when you're in there claiming your free copy, if you go to laserfund.com, I do require a little skin in the game. You contribute a nominal amount towards the shipping and handling, and I'll cover the rest of that cost, and I'll pay for the book. I'll fire out a hard copy of both of these, okay, in one book, to you via priority mail. Now, when you're in there claiming your free copy, if you'd like to listen and learn or watch and learn, there's those formats available for your investment. You can register for a free educational webinar we teach every week. And also, you can schedule an appointment to talk to an IUL professional to see how a property structured max funded IUL may work in your particular set of circumstances.